happens when I teach over. Hey guys, what's up? It's Amma Jamma here, and I just want to talk about a couple things I think the biggest hangups for traders are. This is kind of like a little checklist of some of the do's or don'ts to really be aware of when it comes to traders that are perpetually struggling and trying to figure out what their issue is with trading. All right? And I'm going to name 3 things. And the very first thing I'm going to name, what a sell-off. Do we have news, market news overall? Because that was a big sell-off. The first thing I'm going to address on this is, number one, the biggest issue that traders have that I see them absolutely unable to maintain proper growth of their portfolio is being addicted to the SPY 0 DTEs. That's number one, right off the bat, absolutely no matter what. It's just the reality of it. And I say this all the time in the Discord, and this is the truth, guys. And I ask people all the time, I ask them, are you trading just to trade, or are you trading to make money? Because the amount of god-awful setups and chop entries I see members take on the SPY every day is terrifying to me. And what that means is the following. Excuse me. Market's kind of crashing right now. Obviously, I'm not chasing into a put right here. But hold on. So yesterday was a perfect day. All right. I'm going to put on the SPY. And I'm going to put on 5 minute from yesterday. And there was a handful of traders that in here were wanting to take SPY calls. Literally over and over again. Wanting to take SPY calls, taking SPY calls, saying, I got 12%, I'm happy. That's the problem right there. All right? You say, I got 15%, I scaled out, I'm good. The habit that is creating is that you're getting rewarded for improper risk management. All right? What that means is the following. So say you take, I don't know, let me put on the 1 minute on this trade. Because I see this so much, and I see so many people staring at the SPY for hours and hours of the day and forcing trades over and over. All right? So something like this. Say even you got the best entry ever, like right here. All right? You get in at the beginning of this breakout candle, and say that's where you take your SPY calls. All right. What's your plan? Like, really, taking SPY calls right here. What's the plan on this? All right? If you have to have proper risk reward, what's your plan? Because on a trade like this, what do we know automatically? All right? We know just above our head, we had insane chop through this area here. And this is me giving you the best possible scenario of getting these breakout candles, okay? Me giving you the best possible scenario there. All right? And actually, they were taking SPY calls here, not there. But I'm even giving you the entry that some of us took, and it paid 40 to 50%. But you take that entry here, all right? We already know off the bat we're going to have a really rough time getting through this. All right? This is going to be resistance. No matter what. We know that. We know that. We're hitting our head here. We hit our head all through here. We had one impulsive test for this candle right here. We had one impulsive test. It was rejected, and we couldn't push from there. All right? So, we have resistance, 15 cents above our heads. All right. So that's fine. I'll take my profits there. I'll take my 12%. All right. So let's put a little risk reward bar on this. We take the entry here. We got in that candle so quick. We were so proud of our entry because that candle blasted off. Woo this, woo that. Yay, I'm the best. And your stop loss is going to be at loss a day, open and close below. So it's going to be a few cents below. So really your stop loss can be about here. All right? Because there's no way you're selling the second it touches this and getting faked out, like we all like to say. And we expect resistance here. So there's our target 1. All right, and let's add 2 of these. So we've got this one for target 1. And even at the best case scenario of, oh, we pushed all the way up to this area where we also will expect resistance. And we got a couple wicks, yes, but we also, so let's add a second one here for target 2. All right, this was our entry. And oh, I expect this to go all the way up and test this wick high because we're going to get resistance there. If we break through it, great. That's a bonus. But we never take a trade based specifically, unequivocally on breaking through an area of resistance. We have to chart in accordance with expecting resistance at specific places. All right. So what do we have here? We have a 3-to-1 risk reward, which means on this trade here, with expected resistance right around this area, which we talked about, I drew that square, I accidentally deleted it, but we know we're going to have resistance around these wicks here. All right. So even if we pull this up a little bit, let's pull it up to the middle of that. That tells me right here, and I'll even pull this up. I'll even pull this up to you sell exactly at that wick low at the penny. Even in the best case scenario of taking this entry, for every dollar you risk, we're only expecting you to make 50 cents. That's what this shows me. What does that mean? That means, so we're risking $1 to make 50 cents. AKA, what that means is we have to win. Do you know how many percent of our trades we need to win for that? Anyone in the chat? Is anyone listening? We need to win 75% of our trades to break even if we trade like that. All right. So that means, so trade number 1, we're a winner. We made 12%. And we're going to say right here under this one, we won. We took profits. Winner. Cool. All right. Great. So far, we have 1 win. Zero losses on the day. We risked $100. And made 50. To make 50. Whatever. Same difference. Okay, there we go. Next trade. All right. So this next trade at this point here, so we took this trade, whatever. Even if we popped a little more and we made 60 here, let's say. But we're just going to keep it at our target price here. Okay? So right here, let's do it again. All right. So right here, oh, we're starting to break out. We're starting to break out. All right. And then right about here, we go, oh, we just broke. We just broke previous low a day. All right. We broke that and we held it. So we take entry here. All right. Let's look back at the past. Oh, wouldn't you know it? We're going to have a resistance ledge right here, immediately above our heads. And say we notice that when we say, no, we can't take that trade. That's right above our heads, right there. Okay, there's no way. We're not taking that. Because our stop loss is going to be, what, way down here now? Way down here? So then we decide to wait. We say, we'll wait till we break out of this. All right? So we don't take a trade in this area here. We're actually responsible, or so we think so. So then we take the trade here. And we get in on this candle right there at that break. And our God target, our hopeful target is going to be here. Because if we put on, like, say, the 5 minute. Where did we go? What the hell? All right, there we go. So on the 5 minute here, where did I show the trade? All right, so we can see how we hit resistance. All right, hold on. It's right here. There we go. Right here. So these candle buys, this is our realistic target right there. All right, at these top candle bodies. That's the first place we're going to expect resistance, right there. And that's with ignoring this previous candle body, which proved to be resistance right here. All right, so let's go back to the 1 minute chart. I don't know how I ended up with that winner thing in my hand. All right, so now we take that entry here. And that's our target level. All right, so let's put back on our long position indicator right here. That's where we get in. And that's having like micro fast hands because this was breaking out at the time. All right. So there's our entry. And if that's our target right here, awesome. That could be like, realistically, that could be like a 60% trade, of course. Yeah, absolutely. Fantastic trade. All right. What happened to all my writing I had? Son of a bitch. So anyway, that could be. So where's our stop loss though? All right, it's at this wick low. We're gonna stop off the loss this wick low here. All right. Once again, we are barely at a 1-to-1 risk reward taking this trade. Barely 1-to-1. All right. And remember, as of right now, I don't know, where did my writing go? This is going to bother me. I got to find it. Did it all just disappear? Why would they move it down there? All right. So that's me trade 2. Sorry if this is boring, but I feel like you guys need to actually see this to understand how the math of the market works. So now we take entry here. Make that bright blue. There's our profit. There's our stop loss. We're at barely a 1-to-1 on that one. So that means we're going to risk 100 to make 100. All right. But we don't quite get there. That is another issue. We don't quite get there and we don't take profit. So we're back at break even and we end up down at the stop loss and we hit our stop loss right here. Okay. So now, because of the risk reward, we have 1 win and 1 loss. And we're down 50 for the day. At a 50% win rate. All right, there's 2 trades. And the reality is, if we would have taken trades with proper risk reward, like the Tesla trade I was showing you earlier, we could have under a 50% win rate and be incredibly green because of how we're playing this trade. All right. So then the next trade, same thing. We're at that same area. And this is why playing chop is insane to me, because you have so many levels of resistance. So right here, we're 1 win, 1 loss. We're down $50 for the day. Tesla today, with the risk reward I showed you of taking the entry here, having our stop loss at the loss of this candle or loss of VWAP here, and then our target range here and here. Like I said, same exact thing. We're taking a trade. We're doing all the same things, but we're being caught. We have a 1-to-2. So we're going to make $2 for every dollar we risk. All right. So if we take a trade like this, We could lose our 2 next trades and still be green. And I do not, for the life of me, and I'm going to reiterate this over and over and over again, people that randomly grab entries at these bounce points without the plan of where their targets and profits are going to be. Because I did Tesla. I took a Tesla and it didn't work out yesterday. But here's the difference with the Tesla yesterday. All right. We didn't have chop. And we had this wedge we broke out of. And we retested. This was our entry. All right. That was my entry. Because people would be like, what's the difference? I literally get messages like, what's the difference? All right. And this is the difference. That's our entry. And because of where it's at, I expect this was my price target. This first level of resistance here. All right. And my stop loss was going to be loss of low a day. So we take the entry here, even if it's further up right here. All right. And loss of low a day. And I'll go a little lower because we're not going to sell exactly there. All right. I'll go even way down here. And then my target price up here, even if the trade doesn't work out, all right? We have a 1.54 to 1 risk reward, and that's with giving deep, deep stop loss on this. With this risk reward, I could win 33% of my trades and still be profitable. So I could try this trade 3 times and have 1 of 3 work out, and I'm green. Whereas this SPY, with this chop and the way these risk rewards are set up, you have to win 3 out of 4 trades to break even when you are risking $1 to make 50 cents. And I know you guys have heard this over and over and over again, but it's so important to trading, or you will never ever be successful trading. And that's just the reality of it. And then the second part of this is people with that anticipation of reversals before the confirmations. That is the second part that really. So how do we remedy this, Amy? What do we do when we're taking alerts and it moves fast, this and that? Chart the plays ahead of time. When you see me or KT buy something, if you don't have time to look at the chart and identify your target range and your stop loss range that works for you, don't take the trade. Quality, not quantity. Quality, not quantity. I don't have a single, and we'll go into swing trades too with this. I used Intel as the example on the daily chart. I don't have a single swing trade that I'm not looking for at least a 1 to 3 risk reward. I do not take swing trades unless I expect to make $3 for every dollar I risk. So let's do that risk reward bar on this one. So we took the trade here, breaking off of this wedge, this low here. All right. Obviously, target 1 was the gap fill. All right. So we took it here. And target 1 was right at the gap fill here. And my stop loss was, it's very obvious before I even take the trade. Right here. This is a major support resistance. We hit our head there 4 times. All right. Resistance, support, resistance, 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 support. What that tells me is if we lose that line, we're very, very likely to come down into at least this area here. All right. Why on earth would we continue to hold that? I get so many people that DM and say, what should I do with blah, blah, blah trade? They didn't take profits, or it started selling off and they didn't sell when I sold this or that, and it clearly lost trend. If you guys can't take the mental leap from trading the chart versus trading the P&L, it's a big, big problem there. You can't stare at something and be like, oh, it's only down 35%, even though we lost trend. I'm going to hold it. But then at the same time, you're that profit taker right here. This is where we opened the day after I alerted this. Oh, no, Maisie. Right here. This was the next day open, where I'm willing to bet 90% of the people that took this swing closed their entire position right there. And it's fine. Like I said, that's fine. The problem with that is this 90% that closed right here are also not stopping out right here. And then they go, I just can't. This swing blew up my account, or I missed the good swings, or I didn't take any profits. And that's the second part of that, guys. The second, and I'll trim here every time I trim here. The second we trim, stop loss goes to break even. For anyone, and I'm going to repeat this because this is so critical. For anyone here that watches something 30% or over green go red, then go deep red, then proceed to ask what to do with the trade, you need to stop trading and do some education right now. Like, truly, truly. Because that's the other thing. Oh, I only day trade. Swinging's too risky. I always end up, I never take profits. I don't know when to sell. And I hold it to red. Are you kidding me? Like Celsius. And I'm going to call it Celsius because this is one that we got kind of fucked on. But here's the thing. I put the 4 hour here. All right. This Celsius trade. We took the trade here. All right. Right around here. I don't know the exact time. Let me look at the exact time. I'm going to give exacts because so many people got caught in this trade. (7:11), 2:14 p.m. All right. Let's put it on the 15-minute. Because people are like, I don't remember it being up. I'm going to show you it was up. All right. So we did that Monday with the heavy sell. So 2:15 p.m. So we bought it right here. All right. Look where it went to the next day. What did I buy? 719. Let's pick one. We'll pick the 50s. No, it was probably like the 53 because it sold off a lot. All right. So 7-Eleven. No, these are way too expensive. So it was like the 55. Hold on. 56. Let's check the 56. Still too expensive. 60s. Yeah, that would be more like it. All right, so 7-Eleven right here. So our fill was $1.34, $1.17 to $1.34. This was our fill. Even if it was way up here and you didn't get that fill to $1.44. All right? I'm looking right at this thing. 7-Eleven 2024, 2:14 p.m. CELH calls. So you had a fill between $1.16 and $1.45. We sat for 30 minutes above $2 up to $2.31. Fine, great. All right. which was at minimum, $1.42 to $2 to 60 cents. The minimum profits, if you got the worst fill, was 30%. At best, 60%, because we were at, what's the low here? $1.19 to $2.31. That's like 80%. So this trade, 35 to 70. We'll cut off the extremes on both ends. 35 to 75%. I updated trimming. And at that point, a trim, I always sell half my contracts. So when you sell half your contracts at 50%, this is some more math for you. If you sell half at 50%, which is approximately what I did, the other half can go to 0 and you still break even. Read that again. You sell half for 50%. The other half can literally go to 0 and you will break even. So Monday, you didn't take any sells. And then, or Friday, didn't sell at all, a lot of you. And then Monday, we open up down $1.16, at most $1.45, and we're at like 90 cents. We open up down 35% Monday. All right? And you just hold and hold and hold. I got 8 DMs at this time frame, Monday, asking what to do with the trade. We've gone over this. I've taught this. I'm using it as examples because you need to see with your eyes what's literally happening. And then people were saying they bought Friday. Never ever buy a swing after I trim it unless I give a second chance entry. You know, that's like some common sense stuff, guys. So we have 35 to 75%, 35 at worst, 75% at best. Overnight, I updated I was trimming. When I trim, I sell half. That's just all there is to it. Because if I could sell half my contracts, if I can sell half my contracts at 30%, which is usually my minimum trim, 25 to 30% is usually my minimum trim. If I sell half my contracts at 30%, the other half can go negative 60% for me to break even. That's why trimming is so critical. So critical. So this example here, you know, this is where it's either a new trader or you have major impulse control because you didn't take any profits here at 30 to 60%. You didn't take any profits here. We had a second chance where we popped up to $1.80 from $1.40. You didn't take any profits here when we had a second chance at about 30%. You held your full position over the weekend, even though we went from 70%, 30 to 75% up Friday to break even. By the close of Friday, we were down to break even. See that? Break even price. This is a price diagram. This is not the chart diagram. And then you continue to hold. And then Monday, while the thing's hemorrhaging, you continue to hold. So you had 1, 2, 3 chances to get out profitable, or at the least break even if you didn't sell any for profit. 4 chances, because right here, anywhere in here, if you took that 50% trim, you're still going to be green overall if you sold half, even if you held into this area here. And then way down here, when our contracts are like 30 cents, you're asking questions. All right. That's my lesson for the day. I lost 20 of you while I was talking. Says a lot. Those are the people that'll be in my DMs later. Ask them what to do with a trade with their blue name and their green name. Just saying. So it's just, you got to be honest with yourself. Trading psychology and being honest with who you are as a human being is the most critical part of trading. If you're in denial, if you're that person that can't keep a boyfriend or can't keep a girlfriend, live by yourself, have spun through 10 jobs, smoke pot from the time you wake up till the time you go to bed, this and that, I'm betting you're not a successful trader because you're in denial about a lot of shit. So how on earth are you going to be in reality about your psychological trading habits that you need to break? I'm impulsive as fuck. I'm high strung. I get overly excited trading. All the damn things. And how do I keep myself in check? You guys know me. You've been around here for a very long time. I definitely get emotional about my trades. I definitely can be impulsive. I definitely second guess myself. I did with NVIDIA first trade today. But I always set my trade up and follow my plan to make sure, no matter what, I can't blow up my account on any trade. I have to follow my rules. And even if I do, even if I held NVIDIA to 0 today, all right, I let it blow up. I kept holding it. It went to 0. My next trade, which was Intel, and then the trade after, which was Tesla, had such fantastic risk rewards that the element of me being a human being and getting erratic and holding a trade when I shouldn't have was eaten up by the Tesla and the Intel because it had fantastic risk reward. I went through, do you think I'm showing you guys our target ranges for the hell of it? All right. Like, so Intel today, I showed you guys the measured moves. Well, remember when we first started and I said, okay, we're going to have this measured move, and it defined our targets. And I drew the little line right when we were taking the trade. I said, all right, here's our first move. And then our second move was from the top of that flag to the bottom of the next, which was right here, pretty even. And then we identified this one. And that's where we drew our target. And when we took our trade, which was right here, we did that twice. We actually had 2 extended legs up. I knew my target was here, and I knew exactly where I would sell this. If we had a 1-minute candle or a couple 1-minute candles open and close below our trigger point, I'm out. So on Intel, I've done this so long, I know my risk reward makes sense just looking at the chart. So we took the entry here. I would sell at the loss even if we waited till, even if we waited all the way down to VWAP here. Okay? And then this was our target zone. That's all 2 to 1. So once again, I could win 33% of my trades, 25% of my trades, and break even. That right here, having this kind of risk reward going into the trade, that buffers the 25% of the time we're impulsive assholes and blow up a trade. But if we have a ass backwards making 50 cents for every dollar we're risking, normally, once we incinerate and blow up a trade, we're really fucked. It's so important. It's so important. I show shit like gains porn all the time. I'm sure you guys get FOMO, this or that. Wish you would have held this or that. I'm not holding that. I'm not doing that to rub it in. I constantly update the profits because, yes, the Tesla was ridiculous. That final contract I held as gains porn. But the rest of them, like me updating Intel up 200% and then at 150 and 140, this or that, these were my target levels. This is me following my trading plan. This Intel chart right here, day one, of course I'm going to hold. Let's do a little freaking math here. So day one, here's our gap fill. And we know, draw a line and halfway in the gap fill, which is right here. We were above it day one. That tells me we're going to fill the gap. When you break that halfway point of the gap, we're going to break it. So instead of freaking out selling it all right here, I knew my target one was legitimately the gap fill. Sorry. Actually, I would go to the bottom of this. I wouldn't necessarily do the full gap fill. I would have done the bottom of this right here. And still, yeah, like within the first 10 minutes of the day, we were past that halfway point. Halfway point's actually like right there, right where we opened. And then once we hit this, see, we kept wicking out here and I was trimming. I updated trims. I didn't just trim randomly. The day I posted my trim was when I saw us hit the wick a second time here. We were starting to wick out at a major level of resistance right here. We were wicking out. But then we popped up. We filled this gap too. You know, now we're at a place where we need to close above 36. We want to see a close above 36 for continuation. But when I show profits that are massive profits, it was my trading plan. Tesla, perfect example. I'll go to this chart for Tesla because I've got it already drawn out. And I went over this 2 weeks ago. I literally showed you guys 2 weeks ago, like 4 days before Tesla even broke out, we had already identified these liquidation zones here, 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 and how fast it moves through. We were talking about that, and I was charting that here. I used the chart as an example of my volume profile class. Go look for the volume profile class, guys. I used this chart as an example, and it was down here. I made that down here. It was this day. That's when I made that. And I was teaching volume profile. And I showed you guys how it worked with this chart. It was handed to you on a silver platter. Plus, I alerted it 2 times. So when we shot through this, we expected it. It was there for us. So when I'm like, oh, we're up 300%, it's not me getting lucky and rubbing your guys' faces like this is this is an update of my hold and some sort of like fuck you, and I held something to a ridiculous place I shouldn't have held it with. No. This zone, this liquidity shoot through here, the trap zone I call it, because if we lose it, it will be a trap. Shooting through here was expected and pre-planned. We charted it here. We knew, we talked about how at that time, because we have all this volume here, at that time, we were sitting right at our point of control. And we talk about when we break that point of control, we're in like Flynn, this and that. But yet no one held Tesla for more than a day or two. Everybody was out by there. If you're going to do that, it's okay. You have to cut your losses just as quick. But when I constantly update swing posts, Tesla, Unity, this, that, the other, it's because it's going according to plan. With my Tesla, the like 1400%, I even said, this is my last contract. I'm holding it because it's obnoxious. I like that. I'm very full disclosure on that. But I haven't sold a single share of my Tesla or any of my 2025. Same thing with Unity. We were up massive, like 90% on the short-term contracts immediately within like a day or two. How many of you still have some Unity? I bet some of you do because I was very clear on this one. So we trimmed Unity. So at this point, we have stop loss at break even for our final contracts. Cool, perfect, it works. It does look like it wants to come down some. We opened up green today. We started to sell off. But we know what our plan is. And for me, if we do start to sell off and I close at break even, if we bounce at this area here, I'm going to rebuy. I'm not abandoning this chart. But look at this. Once we break here, once we break 1860 and we start shooting through this liquidity zone, all you guys are going to go you roll your eyes and be frustrated because I'm updating something up 300, 400%, and I'm not updating it like 10 times when it's part of the plan. We know the break of 1870 is going to pay us to $21, but no one will be in the trade anymore. All right, I'm done. I'm on my soapbox now. Love you guys. Hope that helps you with some of your proper risk reward management. Bye, guys.